of course, a much less of a loss than what we saw in the previous period. And obviously a company that has gone through some really tough times. You've also seen the dilution for shareholders over the past couple of years or so. Take us through the period that was and how you managed to bring down the loss to around 240 million rand or so.
I think a person needs to compare the first 6 months, in other words, the results till our interim period with the second 6 months. And I think the next thing a person needs to add to it is that our turnaround strategy only in real terms started in December. So you need to review the full year results from that perspective. But if you look at the full year results and you break it into the two components, the first half and the second half, what you'll see is that the first year loss was 168 million rand, where the loss in the second period reduced to 116 million. But what you can also do in relation to that is look at to try and get to grips with the operating performance. Is there's at once-off cost in excess of 100 million rand, which you can bring into consideration, and it will give you sort of a picture where we are on the turnaround strategy.
With regards to your impairments and chatting to a few investors out there, your impairments came through at 27 million rand from 548 million rand. And most investors say, hold on before you get into blue financial services, purely on the premise that when we do really see a massive, even bigger drop in impairments, then that's when it's safe to head into investing in the company. Can we say that the downward spiral when it comes to impairments is now fully on track and we could see that number heading closer to zero?
I'm very happy you made that statement. If we look at the impairments in the first 6 months of the year, the net impairments was in the vicinity of 75 million rand, whereas the impairments have dropped to 25 million after extraordinary write-offs. Yeah. So if you look at the total impairment position in the second 6 months, it's actually a release of impairments almost of 100 million rand.
With regards to what you'll be doing going forward, and let's delve into the African space. We know that you have changed strategies when it comes to what we're seeing on the ground with regards to loans and loan approvals. Has lending from branches now been moved to head office making the big decisions? Would you say that has also been a key focus and a key factor in the turnaround in the company? I
think one of the key factors in the turnaround strategy is to bring more controls into our systems. And in certain countries we've replaced the old systems with new systems. So by bringing in more automated decision making with scorecards into the loan approval process, it brings more consistency into our lending practices, and with more consistency it's managed to reduce impairments dramatically, as I stated just now.
And when do you expect impairments to fully come down to that zero level where you'd like to see it?
Well, if we look at all new lending that we've done since acquisition in December, the total impairments raised on new lending is less than 5%. Now, for I think impairments of less than 5% for in the micro-lending industry, I think is on standard and possibly a little bit too low.
You've always had a strategy to be a pan-African player. Would you say that that's still currently on the cards? We know that you do operate in some African countries. Is that the process going forward, that you'd stick to it, or would you like to get the story right in an individual country as opposed to thinking about expansion going forward?
I think it's both. You can't expand if you don't get it right in each individual country. So our strategy at this point in time is to make sure that we get it right in each country, we turn each country to the levels of profitability that it should have. But simultaneously, we are obviously also looking at whatever opportunities there are in other countries, because we must certainly have a wide Pan-African approach. But we first need to get it right in the countries that we operate in.
With regards to government employees in Africa, we know that that system has worked for you in the past, where essentially the money owed to you is drawn on a monthly basis from their accounts directly. Is that still very much intact? And tell us how the strategy has been working out for you.
Yes, that process is still intact in most of the countries, whereby on our term lending business we have the payroll deductions, or as you mentioned it. But we have, however, also expanded into more shorter term loans, which is not necessarily payroll deduction business. And we're also quite satisfied with our impairments on that.
You mentioned shorter term loans. Is that your plan going forward? So embarking essentially on shorter term loans and not really thinking about longer term loans, of course, which are far riskier?
No, it's a combination. In some countries we're focusing more on shorter term, and what I mean by shorter term is up to 12 months. Yeah. And in other countries we are up to 5 years. So it really depends on the country and in the environment. But I think it's also important to note that we're quite diverse in different countries. So, by way of example, in Nigeria we operate a full banking license. In Zambia we operate a full insurance license. So there's different strategies for different countries.
With regards to cutting of costs and expenses, we know that you've been very aggressive with regards to this. Is there more room to cut back even further?
I think there's always room to, through improvement and innovation, to save costs. I think what we've managed to do is get some of the behavioural costs and some of the structural cost issues out of the way. And we believe that there will be further cost reductions, but purely based on innovation and better processes.
Johan, we were talking off air and you were saying that you like fixing things. Tell us about Blue Financial Services and perhaps the states in which it fell on your lap and what strides you've made thus far and what your vision is going forward for this company in an environment where we see Capitec doing extraordinarily well, and we know that Able has definitely got a very strong footing in the country. Perhaps you could also establish and tell us about the differences between Blue Financial Services and the likes of the other players in the industry.
I think there's sort of two parts to your question. In relation to fixing things, yes, we that's what I like doing. So in Blue, what we saw, and that's the reason why we invested in Blue, is it's got tremendous potential, operating in 12 countries, a tremendous reach, but there was few fundamentals that was not right. So in essence for us the strategy is to fix those fundamentals, so once the fundamentals is right we can unlock the potential which is really in Blue. In comparison to your question of companies like Capitec, African Bank, obviously very well-run companies, excellent companies, we are the differences between us and in South Africa and let's say Capitec is Capitec clearly is a bank. We haven't got a banking license, which is obvious differences. But other than that, I think from a lending perspective, I think what we're trying to achieve and what Capitec is doing is very similar. But of course, we're still in a turnaround situation, and Capitec is flying.
And where do you see the company in a few years from now? When do you see a complete turnaround in Blue Financial Services?
Absolutely. We firmly believe that the turnaround's not even that far away anymore.
6 months, a year?
I wouldn't like to commit on that, other than to say that when we started, we said it would be 18 months.